The increasing penetration of China in African markets is spearheaded by the major Chinese state-owned companies who have access to long-term financial support from the Chinese government. This is an opportune moment for African countries to address the backlog of infrastructure investments that we've seen and that's long kept Africa underdeveloped and disadvantaged. Let's find out what the perspective is from the Kenyan side. We're joined by Professor Michael Chege, who's an economic advisor to Kenya's Ministry of Planning and National Development. Thanks so much for your time, Professor Chege. I mean, anecdotally, when I was in Nairobi at the end of last year, there were roads being refurbished, there were bridges being built, and I was told all of this was due to the Chinese. So there's definitely benefit on the part of the Kenya-China relationship. What more is Kenya gaining?
First of all, the informant who told you it's all China money is wrong. It's all Chinese construction companies. That's true. But the money is coming mostly from the Kenya government. In the case of the big road to Thika, it is the African Development Bank with the Kenya government. In case of the airport, it's the World Bank with the Kenya government. The Chinese construction companies here are winning hands down when it comes to tendering. This is what you're observing there. And in addition to that, i.e. presence of large Chinese construction companies, is, of course, their entry into investment in the private sector, but most important of all, trade.
Okay, so basically, I think what you're saying to me is, you know, we're partnering with the Chinese on infrastructure development, but we haven't ransomed the country. And that's really the argument that many people often raise when they're dealing with China's investment strategy in Africa, is that whole commodities for infrastructure, commodities for loans model. What's the model that you've embarked on in your dealings with China?
Well, I would say the Kenya government rather than myself. The way it's turning out is that China is turning out to be a strategic partner in the construction industry of infrastructure, mostly by competitiveness as contractors, but also turning Kenya into their gateway for trade in the East African common market, in the East African community. On top of that, there's increasing interest by the Chinese in wholesale and retail trade, as well as light manufacturing. And of late, they've come into automobile assembly in Kenya, and that is becoming an important area for their operations here. In other words, the Chinese are betting in the long run that they'll matter here, and we're beginning to see evidence of that.
I'm glad you mentioned this issue of manufacturing, because it's been a debate that's been raging even at the World Bank annual meetings recently, is as the costs of labor rise in Asia, Chinese manufacturers are going to look for areas where they can produce cheaply and with high volume. And with labor and wages being what they are in Africa, this is probably where they should come. You're making it attractive for them to do so. Do you see yourselves as probably the industrial center for Chinese manufacturing in East Africa? Is that how you're positioning yourselves?
I think our advice to the government is that we should be moving in that direction. What we should know for sure, though, is that although it's often presumed that Africa is a low labor cost economy, is not always the case. It can be quite expensive because often the training is not right, and the discipline of the labor force, and the manner in which our labor is integrated into the commercial sector has not been encouraging to entrepreneurs. What we need to do is to make sure that our labor costs are much lower than our competitors, because those Chinese firms who go to Vietnam, Bangladesh, and India, possibly, Mauritius, we want them here, and we have to train our workers, we have to train in our schools and make sure that they're getting the best value for money. That way, those Chinese firms and industries will come here. And it will be our turn now to export to the global market using that platform. You
mentioned SMEs, and this has also been another critical area where there's a feeling that China also needs to go to, embark on some sort of a paradigm shift. China is being urged to think of SME development, and we saw that fund that was launched towards a development fund in Africa, valued at about $10 billion last year, to direct this. How would Kenya want to benefit from that? Is that how are you engaging the Chinese government in this area where, do you know what, for the now, help us grow indigenous small businesses, because this is where the jobs are at?
My understanding of the Chinese embassy here and the Chinese trade and investment offices here is that they're very much aware to the fact that they've been criticized for not having linkages with local SMEs, the local industry, and African entrepreneurs. They are very much aware of that, and they know that they're getting bad PR out of that. So I think they're more than making up for that, particularly when you come to the road and infrastructure construction programs in Kenya that you've mentioned. You can see that there is deliberate attempt to subcontract some of the work to African contractors. And those I've spoken to say this is working out very well for them.
Right.
There is very little import of Chinese labor in Kenya, so they're using a lot of Kenyan labor, and Kenyans are looking upon this, right, plus the efficiency and the cost which is being delivered, as something positive for the country.
Let's talk about trade, because we're told that in the last 2 years, for instance, the trade relationship has yielded benefits of 120 billion Kenyan shillings. But of this 120 billion Kenyan shillings, Kenya's trade contribution is 2 billion. So the concern is that trade is skewed heavily in favor of China. You should be exporting more to China, producing more for the Chinese market, and that's not happening. What's your response?
My response is that you're absolutely right. China has now become probably the first or the second source of imports for Kenya, particularly import of capital goods, manufacturing, transport equipment, equipment of different kinds. That is clearly the construction material. That is clearly the source. But when you look at and then we're also importing textiles as well as pharmaceuticals. What we are exporting to China is not what the Chinese economy really needs. We are not a resource economy like Sudan or Angola. What we are exporting to China is really a pittance, mostly scrap metal, some tea and coffee, and some raw materials. This is not the way to go. To penetrate the Chinese market, we must be very adept at studying it and understanding what it requires. I think very few African countries have a very good understanding of what the Chinese market requires of commodities and goods coming out of Africa. Probably it's not even goods, it could be services,
right,
like tourism, import-export and all of that. So we are still exploring this, but you're absolutely right. The skewedness of trade is that we are importing a lot from the BRIC countries, from China, India, South Africa too, but exporting to our old traditional sources, destinations in Europe.
What are you doing to fix this? We hear that there's so-called business clubs that have been set up in Kenya to try to facilitate networking, sort out admin things like visas, but try to get Kenyan businesses exposed to the Chinese market. Are they working well? Because quite a few lucrative banks like Barclays, for instance, have signed up to these business clubs. Professor Chege, can you hear me?
Yes, I can hear you.
Okay. Just tell us about the business clubs.
Yeah, the business clubs are a sound idea. And I'm happy that this is happening. You've got to understand, like everywhere else in Africa, there is always a very difficult barrier when it comes to communications and language.
Right.
And culture too, let's face it. What the business clubs will do is that they'll facilitate closer discussion and closer intimacy with what the Chinese economy is really like. But I think over and top of the clubs is the fact that Kenya Airways is flying now daily to Guangzhou, and their flights to Hong Kong. And China, the Chinese embassy here and the trade mission are making it much easier and much cheaper for Kenyans to travel to China and sample the market. And there's a lot of informal trade, small-scale traders going to China now, more than it ever was. Is at that level. But I agree with you entirely. We must upgrade this. We must do better than we have.